All right, welcome back inside our proactive newsroom. And joining me now is Jane Edmondson. She is the head of index product strategy at Vetify. And Jane, it's great to see you again. How are you?
Doing great. Thanks, Steve.
Yeah, since last time we spoke, the NATO Future of Defense has sprung a follow-up product. This one's called the Army Future of Defense. So, talk to me a little bit about this new product, an interesting one.
Yeah, so building on the success of our NATO Future Defense UCITS ETF in Europe, which, by the way, just hit a $2.5 billion assets under management milestone. So, great things there. That product is focused on defense, cyber defense, and defense technology. So it takes a future of defense approach. And we've launched a companion product that's really focused on the European opportunity. So the future defense opportunities with a skew to Europe with 90% of the index portfolio with European companies. And certainly, the European defense sector has seen an explosion of investor interest given all the spending that's going on in Europe as part of this European rearm plan. There's a $800 billion spending package that includes 650 billion euros in defense spending over the next 4 years, 150 billion euros in credit facilities to fund all this spending. So lots of spending going on in Europe, and certainly investors are looking for ways to get that exposure, especially in light of the order backlogs and the tremendous earnings and revenue growth that we're seeing in the region.
Yeah. Now, Jane, you mentioned that the new Army NATO ex-US product is 90% Europe. Is that right?
Yeah, it's not 100% Europe, and we did that kind of by design because countries like South Korea and Israel, I think, we're going to become very critical in helping Europe close their technology gap. Currently, there's probably about a 5% technology gap in terms of years between countries like the US and Europe. So having exposure to countries like South Korea and Israel that are, typically more high tech can help bridge that gap over the next few years. I mean, there's going to be lots of spending, obviously, by Europe. There's going to be, sort of a focus on domestic production. But as sort of a stopgap measure, I think South Korea and Israel become important players in this game.
So NATO will be meeting this month in June. So what are you expecting to see come out of that meeting of the minds, so to speak?
Yeah, so the NATO summit is going to be in the Netherlands, June 24th to the 25th. And I think, one of the key areas of focus is going to be this 5% of GDP target the US has proposed for NATO spending. Currently, 23 of the 32 NATO members are at 2% of GDP, so they just accomplished that in 2024. But already the US and other allies are calling for an increase in spending. Up until recently, that 5% of GDP target seemed like kind of a tall order, but it looks like there has been kind of a compromise solution that's been arrived upon. Uh, NATO President Mark Rutte has proposed that a 5% of GDP spend that would include some softer, sort of non-traditional defense areas, areas like infrastructure, areas like cybersecurity, AI, defense technology. So that proposal seems to be getting some traction, and I would anticipate that at that NATO summit that the 5% of GDP target with those compromise provisions could become the new target in the future.
So even with that, it still sounds like there's going to be a lot of global defense spending to come.
Yes, absolutely. And I will say also, thank you to NATO because their new provisions seem to align, you know, directly with our future defense posture that we have in both these products. So thanks NATO for that. But yeah, NATO is already spending about more than half, really, of the 2.7 trillion that was spent last year in defense. That number is going to go up. And then I think another region where we're going to see an increase in spending is in the Asia Pacific region. Just recently, U.S. Defense Secretary Pete Hegseth was in the region in a conference in Singapore. He's calling for an increase of spending there among our Asian allies. Already, Korea is at 2.6% of GDP spending, so they're the biggest spender in the region. But he's calling for Australia to boost their spending to 3.5%. And all of this, of course, is in response to all the investment that China's doing in the region, the need to, defend Taiwan's interest, and then also this, the threat of North Korea in the region as well. So we're going to see a lot more spending coming from Asia Pacific region, from countries like Japan and India as well. And yeah, certainly more spending to come and a lot more products that provide exposure to these spending themes.
All right. Lots to watch for sure. Jane, thank you so much. Great to see you again.
Thank you, Steve.
All right. There's Jane Edmondson. She is the head of index product strategy at VettaFi.